Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Guys, these people are always wrong. What are we talking about? Well, it's going to affect stocks and it's going to affect cryptos. You need to know this. Let's go.
Trade Genius.
Hey everybody, Bob, Trade Genius here. Peace, love, and Trade Genius. Spring into some savings with us right now. We got some great specials running. Market is in precedented areas right now. We think we got a good handle on it. Go to tradelikeagenius.com. Take advantage of our spring specials. Thanks for listening. See you later.
So Bob, nothing new under the sun, right? This chart kind of explains it all.
Yeah, interesting. And we're having an interesting day in the market too. I'll let you explain that, give people a little bit of a thumbnail. Because it was a bit of a surprise. I think caught a lot of people goofy-footed. But I think it was apropos. And we're going to talk employment tomorrow because we have a bunch of data slides and stuff like that. But it was really interesting to me. I found this chart and I wanted to share it with you guys. This is amazing. In trading, it's all about, I guess, just overwhelming force because we're herd animals, apparently, and we have to herd all our way in and all our way out. And usually the herd is in the wrong pasture. And so now everybody's in, and that's great. If you asked yesterday, oh man, I'm in NVIDIA, I'm in SMCI, I'm smart, you're an idiot if you're not in it. Well, today, not so much, and so you have this situation where you could be all in, but the door is only so wide on the way out. And we've seen a million times, Phil, when the herd wants to leave, the old phrase of he who panics first panics best. And I think we're in that situation now where everybody's pumping in hard, but the big money has already been panicked out. Jamie Dimon, Gates, we've talked about this before. Insiders have been selling this rally now for weeks. And here's another thing that's really wild too, Phil, is that, and I didn't know this, but Charles Schwab did a study. If I told you this at all-time highs, you wouldn't believe me. But 50% of the stock market is below the 2022 highs. That's insane. So what we're really seeing here, and here's the volatility too. So the volatility in the market is less than 2%, right, of the index. But underlying just stocks in aggregate, the volatility is 9%. The stocks in aggregate are performing less than the indexes are. And you know what, that's the mirage effect that we talked about. And when it turns, you get leveraged the other way. You're like, why are things down more? We shouldn't be down so much. And I think we're seeing in the market now all these most shorted and small caps are trying to get a bid here, to play catch up to the Mag 7 as the Mag 7 has been falling back. So, we're really at an interesting juncture here. Will a small cap save the market at this point, or is today a harbinger of maybe we topped? It's going to be really interesting to find out.
Yeah. And, it's interesting too, because as we get up here, so the red bars, the histogram is the Fed funds rate, right? And we're at historical highs and we've paused for, 3-4 quarters now. And typically in recent times, you just don't get another rate raise after that. Now, granted, inflation's is kind of a different story this time around, but they keep barking about how they want to get down to 2%. However, recently Powell at his testimony kind of also let the cat out of the bag that maybe we don't have to get back to 2%, which is something you and I have been harping on, that we think really we're calling the Fed's bluff here and we're not really ever going to get back to 2% anymore. So the point is that when we have a pause, we typically don't see a rate hike. Okay. And then now with those comments from Powell, we're probably going to see a rate cut coming. So now really it's a matter of, do we get one in June or do we get one, in July or whatever the next meeting is after that? But if they do come now, because we're coming from an inverted yield curve, once again, retail has, piled in at the highs and there's probably a good rinsing coming, and it's going to be even worse than last time. So we had this going into the end of 2021 into 2022 and we had a pullback. The difference is going to be that I think the macroeconomic numbers aren't going to be supporting a higher low, meaning a bigger pullback that goes higher. My prediction will be that the jobs numbers are going to start to go into recession territory, and so are the jobless claims and a number of other things too. Personal interest payments, right? Those things are at beyond all-time highs, and that is always a harbinger of a recession. So there's a number of things, and we see it locally too, right? Businesses are closing up. up. People are deferring their rents, right? So this is not the same as it was in 2022, and we had that pullback for several months.
Yeah, and it's interesting, Phil. It's really perverse and it's counterintuitive. But them raising the rates, the market likes the rates go up,
right?
And everybody says, well, the reason why the market's going up because they're expecting rate cuts. But when we start cutting rates, the market goes down,
right?
And here's the reason. And I didn't know this. It's so funny. You do this for such a long time, but I think because it's more exposed now, it's more obvious, is because now we see where the leverage has been coming from. They've been taking the T-bills and leveraging the collateral, and when that starts to go down, they lose the amount of collateral they can work with, and then people sense recession, and then it works the other way. So it's kind of perverse, the fact that the Fed is trying to fight inflation, but the way they're doing it, they're creating inflation. And now that you think about it, maybe this all is by design, because I think they're scared to death to let this market actually correct, because I don't think they know where the bottom is, Phil, to be honest with you. And I think they don't want to let it, have a free market on their hands, because they may find themselves in a really, really deep hole.
Well, part of that too, Bob, is because there's so much leverage in the system. It's larger than the global GDP. If they let the market go, and you and I both know that the leverage would get overdone to the downside, it would be like oil a couple years ago where we printed negative. The S&P 500 would go negative because there's too much leverage in the system.
Yeah. Hey, let's switch gears here a little bit too. I want to talk Bitcoin, and you have a chart, but I also want to talk about, you were telling me a little bit too about the flows and the way the market's acted today. I know we don't have a chart for that, but I would love just to get you maybe a 30-second on the market, and also show, because Bitcoin did something interesting today too. But let's close with that if you don't mind.
Right. So with all of that stuff being said, this, investors being all in, that can persist, right, for another 2 or 3 months. So we're not saying it's going to crash next week. We're just saying that it's building up to that, and the data is going to come in to start to support us rolling over as the year progresses. Now, going over to Bitcoin, we poked a new high. If you zoom out on the chart, kind of looked like a double top around 69K, right? And we were discussing that, you have to kind of be on guard in case that is a double top. But today, boom, we squeezed past it by a respectable amount. Now we have what I would call a selling tail, meaning that you have a wick above the all-time high, but we got a rug pull again, right? So there's definitely some players in here that are trying to game a lot of liquidations to try to get big moves that they can profit off of quickly. And we saw it again today. We poked up over 70,000, and then we had a pretty quick pullback of about, I think it was about $4,000 to $5,000 back down. So question is, what does that mean? Well, historically, when Bitcoin interacts with all-time highs, there's a bit of a dance around it. So I would not be surprised if actually we end up pulling back a little further and creating kind of a consolidation range. And it might take part of this month to kind of work it out. But as we progress out of the month, then I think we're going to probably see things take off across the board. And that's where I really think the euphoria will start kicking in. I don't think we're anywhere near done yet to the upside. Now, if you notice on the chart there, right, the range trader, we're always tweaking things, and Bob actually had the idea of creating extensions to this thing. So when the range trader is that gray section there, and you'll notice we go up to that, we get rejected. That's typically what we expect. But then when it breaks, typically it breaks by a certain amount, and that's what those black lines, if you look above where it says BTC USD on the chart there's a black horizontal line. That's exactly where we topped out at. So this thing projects, mathematically, because understand algorithms run the show, and algorithms run on math. And so this is a Fibonacci calculation, and it's very, very accurate. It works in crypto, it works on the S&P 500, all over the place. And so when we see these breaks, that's where we target, and it's very, very reliable, because markets like to overthrow. A lot of times though, retail doesn't understand where we're overthrowing to. Well, this kind of clears that up. So this is a tool that's available to everybody that's part of Trade Genius. You can go over to the website. It's part of like the basic indicator package has this. So it's very powerful tools at an entry level type of setup for you guys.
If you look on the right now, it says we broke that ranger. It also gives you an area to look for support for dips to buy. So we even have the lines now here to, depending on how aggressive you are, should you buy any of the dips along those black lines on the way down to that blue bar. So it's a really cool tool. I live by it. That and our worm, as you see down below, and then our vol stop. This really complete package, and And then there's some add-ons around Sniper and Kona. But if you guys want this stuff, it's really, really effective. We had guys today, we were trading off of it. We had a big move in Mara today. Just, we had a buy signal and we got a Sniper sell and I put a stop underneath it and protected our profit because we went right back down again. And that's what these tools are designed for. So, come check it out. I mean, this is really good stuff. You want to consistently make money in the market, you need tools like this. With that, tomorrow, we're definitely going to talk unemployment. Phil has some good data. I got some data I'm going to give to him. We'll put it together for you guys and send you off into the weekend. There's some really interesting things happening with unemployment. What you see is not what you're getting. And I think, we're definitely seeing, as Phil likes to say, the cruise ship is trying to turn around right now. So stay tuned for that for tomorrow. Thanks for listening. Phil, thank you for everything. And you guys have a great night. We'll see you tomorrow.
Trade Genius.